I've created this video to help explain the completion of a Form 8949 and a Schedule D. First of all, the Form 8949 rolls up onto the Schedule D, so that means we're going to have to complete the 8949 before we can complete the Schedule D. So the first slide shows you the example facts. You have some stock here that you are selling for $1,000 and it has a cost basis of $10,000. Using the formula you learned in Chapter 1, amount realized minus adjusted basis equals your gain or loss, that will tell you that this particular transaction has a $9,000 loss. Let's also assume that this is a short-term capital loss. So that means we acquired the stock sometime within a year and we've sold it. Now the problem facts didn't give me the date acquired or the date sold, so I can make those dates up. So in column A, you're going to describe what is happening. Here it was that we sold some Green Company stock. I've already told you that I'm making up my dates. You just need to make them up sometime in the year 2011. Column E is our sales price. Well, we sold it for $1,000. And column F is our cost. We have a cost of $10,000. There's nothing more to complete on this form other than the totals. So jump down to the bottom, and row 2 just asks you to add up all of the lines above it. So the total in column E is going to be 1,000, and the total in column F is going to be 10,000. So now we can move over to our Schedule D. You may have noticed on the previous form, if not, you can pause this and play it again, that I checked box C. So since I checked box C on the previous form, I'm going to transfer the column totals into my Schedule D. And we already know this is a short-term capital loss. So our total sales price goes here, our total cost goes in column F, and then column H tells us that we are calculating our gain or loss. Well, we already know that's a $9,000 loss in this case. Now, if it happened that we hadn't sold the stock, but we had lost them, or that we didn't get any money for them for whatever reason, maybe they were stolen from us, I don't know. The only difference here now is that the sale price goes to 0. Our cost basis is still 10, and then we would have a gain or a loss of 10,000. So returning back to the problem facts that we have in this example, now if you look at line 7 asks us to add up our total short-term gain or loss. Well, we have a total of $9,000 short-term loss. We don't have any long-term capital gain or loss, so we leave 15 blank. Now when we go to the back side of the Schedule D, line 16 tells us to combine lines 7 and 15. Well, we had a $9,000 loss on line 7 and nothing on 15, so that yields a $9,000 loss on line 16. And then it tells us in line 16, if there's a loss, skip lines 17 through 20 and go to 21. So now we jump all the way down to 21, and 21 says, enter the smaller of the loss on 16 or $3,000. So we're entering $3,000 in this case. And then it also tells us to enter that on Form 1040, line 13. So this Schedule D rolls up onto our 1040, line 13. And the last thing you have to do is answer the question on row 22.